Hey everyone, welcome back to Corporate Decoder. Today we're re-diving into Semler Scientific Inc. latest report, and let S just say things are getting interesting, especially when digital gold is involved. So buckle up, because this filing, released on the 3rd of October 2025, gives us a peek at Semler Scientific as preliminary financial and operational updates, and some of it is quite the roller coaster. If you like your corporate insights straight up and to the point, make sure you are subscribed. And hey, we've got a great community over on Discord, link in the description below, where we break down these kinds of filings even further. You should definitely join us. This report covers the period up to the 3rd of October 2025. The company itself, Semler Scientific Incorporated, is reporting on its business. While they have offices in California, this report dives into much bigger things. They've ticked a box here, indicating some written communications are being filed. This often means they are sharing information that could steer investors' decisions. Their main thing, their common stock, trades under the ticker SMLR on the Nasdaq. Interesting. Now we get to the juicy part, the numbers, even though they haven't finished all their accounting for the third quarter, ending the 30th of September 2025. Semler Scientific is giving us a sneak peek at some important figures. First up, revenues. They are looking at somewhere between $6.9 to $7.5 million for the quarter. That is the money they brought in from sales. But then you see their operating expenses. These are the costs of running the business. They re-looking at a range of $12.8 to $13.4 million. They specifically mention about $2.1 million of that is for things like stock given to employees and equipment value going down, which are not actual cash outlays. Another $2.1 million is for merger expenses. So it looks like their cash operating expenses are actually lower than the total, but still quite high relative to their revenue. Here is where it gets really interesting. They re-reporting an unrealized gain of about $30 million because their Bitcoin holdings have gone up in value since June. This is T-cash in hand, but it shows a significant boost on paper from their cryptocurrency investments. And how much Bitcoin do they have? Over 5,000 Bitcoins. That is a substantial amount. They also have around $10.3 million in cash. This is what they have readily available to pay bills and invest. They also reporting their shares, over 15 million basic shares and almost 17.3 million if you include things like stock options that could become shares. Now, they are very clear that these numbers are preliminary. They haven't finalized everything, and these figures could still change. This is common when companies report early, but it means we should treat these numbers as estimates for now. They also caution that these preliminary numbers are not a substitute for complete financial statements prepared according to standard accounting rules. Next up, they're talking about how they release information. Semler Scientific uses a dashboard on their website, www.semlerscientific.com, to share important information about their Bitcoin holdings with everyone at the same time. This helps make sure all investors get the same news. They are going to include things like stock market data, Bitcoin performance indicators, and their buying and selling activity. It is like a public ledger for their crypto moves, and they want investors to check it often. They're also stating that the information in this section doesn't count as official filing for certain legal purposes, which is pretty standard legalese. This section largely incorporates by reference the financial information we already discussed, but then it adds more important details. They reiterate that the preliminary financial information is being included. Again, they emphasize these are preliminary and subject to change as their final accounting procedures wrap up. Here is a major update on their actual business operations separate from their Bitcoin investments. They've been facing challenges with their healthcare device QuantaFlo because of changes in how Medicare pays for services starting in 2024. They were already expecting revenues to go down slowly, but things got worse. A big customer who made up more than 10% of their revenue in the last 2 quarters has stopped using their QuantaFlo devices. Because of this, they now expect their revenue in the 4th quarter of 2025 to be at least 60% less than what they are expecting for the 3rd quarter. That is a massive drop, and they also mentioned that more customers might stop using QuantaFlo due to the changes from Medicare and a recent settlement with the US Department of Justice. This sounds like a serious headwind for their core business. They've also been busy with their stock. Back in April, they set up a program to sell up to $500 million of their stock over time. This is called an AT, the market or ATM offering. It is a way for companies to raise money by selling stock directly into the market. And they've already sold over 5.2 million shares, bringing in about $203.8 million. This money is likely being used to fund their Bitcoin purchases and other operations. This confirms the share count we saw earlier. It is a lot of new shares being issued, which can dilute the value of existing shares. Here is how they are using that money. Between August and September, they bought 27 bitcoins for $3.1 million, paying an average of over $114,000 per bitcoin. This is a significant purchase price, and they are using the cash raised from selling their stock to do it. As of the end of September, they had 5,048 bitcoins, which they bought for a total of $479 million, averaging about $94,877 each. At that time, their market value was $575.8 million. This shows a nice paper profit of over $96 million on their Bitcoin holdings at that point. Also interesting, they have 315 Bitcoins set aside as collateral for a loan. This means they are leveraging their crypto assets. They are tracking something called BTC yield, and it was 30.1% for the year up to the 30th of September. They use this metric or key performance indicator to show how well their strategy of buying Bitcoin is working for their shareholders. They're essentially saying that issuing stock to buy Bitcoin is a good thing because of this yield. Now, we hit the part where they warn us that the future is uncertain, which is always important to read. They're saying that some of the things they say are predictions about the future, and these predictions come with risks and uncertainties. They mention specific laws designed to protect companies when these predictions don't pan out. They list out some key risks. This includes the financial closing process itself, the wild price swings of Bitcoin, and the general risks tied to their Bitcoin strategy and their healthcare business. There is also a mention of a merger agreement with a company called Strive. This means there is a potential acquisition or merger happening, and there are risks that this deal could fall apart. They highlight that the merger might not happen when they expect, or it might not happen at all if certain conditions aren't met. Legal challenges could also impact the deal. They're also warning that the expected benefits of the merger, like saving money or gaining strategic advantages, might not happen as planned. This is tied to the risks of their Bitcoin strategy, the economy, and regulations. This indicates that even the strategic reasons for the merger might be impacted by the volatile crypto market. If you want to dig deeper into this proposed merger with Strive, they provide information on where to find more official documents. And finally, they talk about who might be trying to influence how shareholders vote on this merger. So let's wrap this up. Semler Scientific is in a fascinating, albeit risky position. They are a healthcare technology company that has increasingly pivoted towards holding Bitcoin as a significant part of its strategy. On the one hand, their Bitcoin holdings are showing a substantial unrealized gain, reflecting the volatile but often profitable nature of cryptocurrencies. They are actively raising capital through stock sales to fund these Bitcoin acquisitions, suggesting a belief that the gains from Bitcoin will outweigh the dilution from issuing more stock. However, the flip side is concerning. Their core healthcare business is facing significant headwinds with a major customer loss and anticipated revenue declines. This might mean they are increasingly relying on Bitcoin to stay afloat or to drive growth, which is inherently speculative. The mention of a potential merger with Strive also adds another layer of complexity and uncertainty. The company's direction seems to be a gamble on Bitcoin's future, while their traditional business struggles. The risks associated with Bitcoin's volatility and regulatory scrutiny are massive. Meanwhile, the decline in their core business operations raises questions about long-term sustainability if the Bitcoin strategy doesn't pan out or if the merger doesn't materialize or deliver on its promises. It is a bold strategy, no doubt, but it's one that carries significant risk. Investors need to weigh the potential upside of their Bitcoin holdings against the clear challenges in their operational business and the unknowns of the proposed merger. Alright, that is our breakdown of Semler Scientific's latest filing. What's your take on these numbers and what they signal for the company's future? Do you think their Bitcoin bet will pay off, or are the business challenges too much to overcome? Drop your thoughts in the comments below if this analysis was valuable. Hitting that like button really helps us out. And subscribe for more deep dives into corporate filings. And seriously, check out the Discord in the description. It is the best place to continue the conversation. Thanks for watching. See you next time.